So India soon after independence launched on a program of rapid industrialization. Okay, so let's see first what is industrialization. Okay, okay. So industrialization is a process of manufacturing consumer goods and capital goods and of building infrastructure in order to provide goods and services to both individuals and business. So simple. We, as you know, we are into business. This is a stage where, as an economic development, as an Indian system, we begin and we revolutionize. We begin into a system where it helps us to uh, develop in terms of economic sense. We had a system, government had a plan to structurize the industrialization or in terms of business elements with respect to development of our economic system. So that made industrial development started soon after the independence, which is 1947. So that was the initiation, or that was the first stage in terms of industrialization. So simple as industrialization is the process of you know uh, establishing the development platform for the manufacturing industries in order to provide the goods and services to both individuals and business. Please keep in mind, see, certain business are also required in products in order to produce the goods. That's what we were discussing. Okay, see, products we have different, services and goods. Yes, so goods we have finished and semi-finished goods. So see, certain industries or say certain business organizations, semi-finished goods would be required in order to make final goods. So this is what is the concept of industry production. Okay, so this was more industrialization was more focusing towards the manufacturing industry. Yes, in order to provide the platform to develop in overall with respect to manufacturing industry. Ultimately it was, it has a direct link in terms of economic development. Okay, okay. So in the year 1948 we have an industrial policy, like in the year 1948. So that is, where we say evolution of industrial policy or industrialization in India has been started with the purpose of raising income. See, raising income in the sense, it is a point of view with respect to, okay, it is a point of view with respect to raise the income of our country. See, when see we have a national income, yes, when compared to the developing industries and underdeveloping companies and, sorry, developing countries, underdeveloping countries, yes, or say really not developed countries. So when you compare among us, among different countries who are developed, somewhere government felt that has something has to be put in terms of industries where we also see certain developments in in the growth of nation's income as well. So that's the reason the industrial policy, the policy or the resolution took place in the year 1948, and changing the structure of economy. So that's why industrialization is a system which enhances the system of production. Yes, it provides a platform where you can see the certain development, certain changes in the industries or say manufacturing units. So ultimately, you see the mobilization of money. Yes, so you have goods produced for yourself, or say you can generate income out of it. So you see there is a development with respect to individuals as well as government perspective. So somewhere, the government has, or to change the structure of economy, so they took the decision in order to revolutionize, to have a revolution in terms of industries with respect to Indian economy. Okay, so next is meeting high income demands. So there is an income perspective. Yes, during this time there was a concept in terms of high income required to, so that they can meet this income in terms of establishing in industries producing goods. This is how we create the pattern in terms of mobilization of finance. Okay, see, observing surplus labor. See, as in India, See, I'm discussing during 1947. There was not much technically advanced we were, so we were totally dependent on human labor. Yes, the labor. So we had lots of human labor, or say employment opportunities were available. We had labor number of labors available were high. Somewhat government or our system wanted to utilize that labor in order to promote in by promoting industrial development, so that the industrialization helped to create an employment generation, which is somewhere we are utilizing our labor resource which was available in our country. Okay, next is it helped in bringing technological process. So industrialization took place in terms of technological advancement, because as business organization we are in, so when the industrialization is more towards the manufacturing concept itself. Yes, so when we are focusing more on manufacturing, when we need we need to produce a good number of a good volume of products in order to meet the requirements of our customers. Yes, so somewhere you need to be technically processed. So with the help of industrialization, we can get the technological advancement in our system. Okay, then strengthening the economy. So with all perspectives, the raising the raising income in terms of there are measurements. See, nowadays income, the national income is measured in terms of GDP, which all we know. So when we compare all this, when we focus on in terms of growing all the elements of economy, so it strengthens your economy. See, anybody, if I take individually, if you're strong enough in terms of finance, yes, we can say a person is strong in order to survive. Yes, so as an economy, even the same way, the proper utilization of finance, the proper investment, the proper returns out of that investments make us strong as whole economy, and reduce disparities in export and import elasticity. See, during this time there was lots of differences in terms of export and import. The number of the import and the sorry, the volume of export and the volume of import, there was lots of differences, because we were just considered as developing country, not really developed country. So when you compare yourself with the developed countries and you match up the numbers with respect to export, what you're getting and what you're importing, so the export ratio was high during this time. So the import ratio was high during this time, not the export. So somewhere a government wanted to reduce this disparity in terms of export and import. So why can't we produce here? So why can't we make sure we get the things here? So it somewhere helps us in economic development. So this was, with this view, the industrialization concept was a beginning, was initiated during, or say quite after, or say post independence 19 in the year 1947. So this was with this overview in terms of industrialization. So we have lots of elements in terms of industrialization. We have to produce goods, we have to build an plant location, we have to set up a plant location, we have to set up a manufacturing units, we need good equipment, we need good technologies, we have a labor, we need to utilize them. But for all this, what you need is finance. Yes, so to make sure you run your show in terms of manufacturing industries, so you need finance. Now you can say we have banking institutions. Why we need another institutions or another corporation stating the assistance in terms of financial services? We can ask this question for ourselves. So somewhere banks were providing the financial services. Yes, do agree. Yes, but somewhere they were not able to meet the required demand in terms of finance for industries, certain industries. Yes, so this need of huge investments and long term investments in capital assets made a necessity in terms of establishing NBFCs. Okay, okay. So the government also extended the guarantees whenever the loan was obtained by the public sector industries from the foreign agencies. Public financial institutions were established on the instance. See, IDBI and statutory finance corporations were established. We all know Indian development. This is IDBI. Okay. The development banks have, see, we have to study a few of the development banks as well, that we will study. So now we are looking into in history, so let's we'll just brief out about the histories, and later on we'll be studying on the different development banks which were existed, still existing in the Indian system. Development banks have been providing large and medium industrial concerns direct finance assistance and small and medium industrial concerns through the state financial institutions. So we had all this, development banks were there, commercial banks were there, public banks were there. So there were so many banks were providing the financial assistance. So these corporations issue bonds and debentures, also accept deposits from the public. But the private sector had to depend mostly on the commercial banks, which were also not grown to such a scale as to provide corporate funds required by promoters. See, always, corporate funds are not, you don't, the funds are very huge. The necessity of finance are very huge in terms of any corporate organization. Yes, they don't need any in thousands or lakhs, they need in millions in terms of investments, establishing manufacturing units, procuring the advanced technologies, equipment. All this, has to have a huge investments in order to start up any organization. So it was, we had all the systems. See, we had lots of development banks, public sector banks, private sector banks. So everything, even every system was present in the Indian uh, financial system. But somewhere, it was not sufficient. They were not sufficient enough to provide the financial assistance to the corporate sector, or say manufacturing industries. So traditionally banks have been financing manufacturing activity by providing working capital. With the shortage of financial resources against expanding the activities, la- the companies were mostly depending on credit deals. So, capital goods such as machinery, equipment, etc., were imported or on deferred payment terms. Okay, in simple terms, we had, capital goods such like machineries, equipments were also imported. Okay, so to import all those equipments, machineries, technologies, we need money. Yes, with the inadequacy of financial institutions and services provided by them, companies were set up in private sector under Companies Act, whose main business was to do non-banking financial business. Okay, yeah. So to set up a non-banking financial company is a very attractive proposition. There is no gestation period. Acquisition of equipment and capital assets through leasing was favored to overcome the disabilities of business. Okay, yeah. So these are, see, now, as we all know, non-banking companies are involved in terms of leasing, mortgage, and um, insurance, yes, leasing. So with all these activities, to somewhere non-banking corporations were assisting in terms of providing the finances. So now we said we have a concept of leasing. So what is the concept of leasing? Is leasing is you use the property by paying lump sum amount or having an agreement with the another person. See, there's a difference, lessee and lessor. Okay, so somewhere, to have a lease agreement, you need certain funds. So somewhere these organizations provide on behalf of the borrower who actually in necessity in terms of using the property on lease. Okay, so somewhere with these all elements or the activities with respect to non-banking financial sectors. Okay, so the Reserve Bank of India, you know Act 1934 was amended on 1st December 1964. Okay, by the Reserve Bank Amendment Act 1963 to include the provisions relating to non-banking institutions receiving deposits and financial institutions, with a review to, with a view to review the existing framework and address these shortcomings. Various committees were formed and reports were submitted by them. Okay, see, by observing all the activities of non-banking finance, RBI observed it has to be included, in the financial system relating, and it has to be, given certain provisions in order to encourage non-banking institutions with respect to receiving deposits and financial institutions. Okay, so with this, there were so many communities were framed, were formed, and reports were submitted by them. So we had around I believe there was, okay, there are 50, I think, no, not 50, sorry, uh, there are around five committees being framed in order to review the financial system with respect to non-banking institutions receiving non-banking institutional activities, and considering the provisions being provided by RBI under the RBI supervisory. There were committees being framed, and based on those committees, the provision was given to non-banking institutions in terms of our financial system. So this was all about overview with respect to the um historical background of non-banking financial corporations.